What's up, everybody? Good morning. Good morning. Hope you all are having a fantastic morning. We are watching the market react to the jobless numbers that just came out, which the number was, I'd say, fairly positive here. Consensus was looking for about 240,000. Initial jobless claims came in at 233, so slightly below that consensus and a good bit below the previous reading on this as well. So I think we're certainly in a market where economically good news is good news, right? It's a little bit more about positive economic data than it is about trying to look for reasons for the Fed to cut rates. I think with some of the concerns that have sort of been laid out across the market here recently. The one thing I will say, kind of interesting as we're watching this play out here in real time on ES 15-minute chart. And another thing that I'll say, just kind of when we get these data points, the initial reaction a lot of times isn't the real move, and things ultimately reverse and head the other direction. That's not always the case, and it's certainly a bit anecdotal saying that. But generally speaking, when we see data points like this move the market, this initial move can and does sometimes inverse itself and ultimately continue going in the opposite direction. So we'll keep an eye on that as the day plays out, but testing a key confluence of resistance on that data point there with the 333, 200 SMA, key selling pressure there on Neptune topped out right there at the top of it. So, generally speaking, that would be, an ideal put entry, short entry if you're a user of Neptune. I'd be a little bit hesitant to do that with data just coming out and definitely extreme volatility getting ready to hit as we head into the open here. This could really go either way, but if you kind of stick to your guns and do what you would do normally, regardless of the fact that data just came out, this would be a tremendous short setup right here to go short and look for further downside. But again, we'll see how it plays out. I do want to talk about a couple of things, though, that we touched on that I hope you guys paid attention to and took advantage of. We talked about this on Tuesday, and I do want to circle back to it because I think it's important to kind of recap these things. So we talked about this hedge range on Tuesday, right? We said, the market's pulling back heavily. There's definitely signs that things were holding, especially on the 4-hour. We're holding these demand zones down here. But we talked about having this hedge range in place, right, where we said this would be a great range if we come up and test it again as we close this gap on futures, to either A, put hedges in place, or B, proactively take puts or short positions. So I hope you guys listened and paid attention to that. This was on the charts. We shared it. We talked about it Tuesday. I hope you all are marking these levels down and paying attention to this stuff, setting alerts on your charts if you're using TradingView, because you see exactly what happened was exactly what we were anticipating happening, right? We ran right up into that hedge range, tapped it. Also, I say no coincidence, right there at the key selling pressure there on Neptune here on the hourly chart. So again, we're seeing that big rejection coming off of our hedge range and that confluence with our indicators. That is, again, talking about potential short entry setups using Neptune. That is a fantastic confluence opportunity to get in short. So anyway, I hope you all listened, put those hedges in place, or just took puts because it was laid out for you on Tuesday. Here we are Wednesday, testing that 10 o'clock in the morning, and then just absolutely collapsed from there. So again, hope you guys listened, took advantage. That's why we do these live streams, so you all can be prepared to handle these uncertain market conditions when they come and slap us in the face like they've done lately. So anyway, with that being said, let's go recap some of our trade plans. And then for those of you following along, good morning. If you're here, please feel free to say hello. If you're on the Discord side of things, make sure that you got the chat window open, pop in there, say what's up to me. And then same thing for the folks on the YouTube side of the house. Feel free to chime in, say good morning, say what's up. No need to be shy. I see Unknown Reviews already in the mix as always. Good to see you. Wanting to look at ELF. We can take a look at ELF for you, my friend. Let's get to some of these trade plan recaps, and then if you guys have any other tickers you want me to take a look at, while we're getting through this morning's live stream, please feel free to drop those in the chats either on YouTube or on the Discord side of life. All right, so going back to review our member selected trade plans from over the weekend. And again, I talked about this Tuesday being kind of a more challenging weekend to do the member selected trade plans because of the gap down that we knew was coming based on what futures were doing Sunday evening. It was a little bit harder to kind of find these right spots for the trade plan. This is an interesting though scenario that I do want to talk about real quick because it looks like a confirmed break a little bit, but I think that there's some issues with this, and I just do want to talk about it really briefly because this again, if you're not looking at things like the 333 SMA, probably looked like a pretty good confirmed break and back test. But my big concern here, and I talk about this moving average often here on the 15-minute, probably a time frame that everybody is and should be looking at. 333 SMA, they're right overhead. Personally, I would want to see that kind of cleared out and back tested versus kind of getting in while it's trending down and still kind of right on top of things with sort of a weak looking break there where we just barely close that candle above and then immediately sell right back below it. So, something that maybe could have kept you out of a potentially bad trade there. And again, not all plans work, but I did want to just talk about, how to kind of maybe gauge your setups or gauge things in real time. Because again, when I'm doing this trade plan, these moving averages aren't where they are as we're going into that trading day there on Monday. And so, those things shift. I try to anticipate that stuff, but especially with that gap down that we had Sunday, you never know. So anyway, quick kind of, I thought sort of teachable moment as far as some things that you can do to kind of factor how good a setup is. Do you want to go full position or maybe start off with a small position? If you've got sort of an issue like that right there in your face, I'd say obviously that would cause me to change my position sizing and go a little bit smaller until we get through that potential resistance, and then look to maybe average up on the trade and look for continuation. But other than that, AMD has stayed in the range even with all the volatility, hasn't broken out either to the upside or the downside. Seeing similar things here that we've seen on ES this morning with this move to the upside, testing a confluence and finding resistance the way we would expect it to there with Neptune and the 200 SMA sitting there right there together. So again, will be interesting to see how things finish up and kind of set themselves up for the trading day by the time we get to market open. But AMD, kind of keeping on watch. You guys have the levels. Again, those were posted in the options watch list in Discord and on my Twitter profile. So you can go and find those there if you don't already have them in front of you. Amazon was another member selected trade plan from over the weekend. Again, this one gap down. It was pretty much at PT2 before we even got to market open. So whenever this kind of stuff happens, wait for back tests of some of these resistance points before you start jumping into trades or trying to chase downside when we're kind of the downside move has already played out. Essentially, wait for the trade to come back to you is what I always say. And so Amazon, again, has kind of been an interesting one. It's been trying to recover. It did get pretty close. In fact, I'd say, yeah, it did fill the gap there yesterday and rejected. So that's pretty typical gap fill behavior. Seeing similar things here on Amazon that we've seen on a couple of other tickers with a confluence of resistance that it's running up into off this data that came out here pre-market with the unemployment numbers or initial jobless claims, I should call it. So we're again seeing a lot of things kind of push up into key resistances. We'll see if they can continue through. If they can, we could see the market try to recover, but I think we've still got a lot of headwinds in front of us, and things are certainly looking like they are on shaky ground at the moment. Let's go to QQQ again from the member selected trade plans over the weekend. QQQ recovered pretty quickly on Tuesday, or sorry, I should go back to the beginning of the week. We talked about this Tuesday though, pre-market. Again, this one opened way down, even below our third price target, ultimately came back up, tested that stop loss average down level from the call side of the trade plan, rejected back down to PT1, and has continued to kind of consolidate, not really giving great confirmed break there. But a nice confirmed break and back test very close to PT1 before it rejected there Tuesday. And then yesterday up at PT1 plus, but in the selling pressure with the bearish SMAs coming down. Ultimately, you kind of think of this, if you've ever seen like an EMA cloud, you could think about these SMAs kind of in a similar way, where this is just a big area of potential selling pressure with two key pressure points. But overall, kind of shifting things to the downside again, running up into key selling pressure here this morning after a big downside move yesterday off that first price target. So again, we'll kind of continue to keep these things on watch, and the market is extra volatile. Also, one other thing, and I don't know if we touched on this Tuesday, but I think it certainly is worth mentioning here. I know I've talked about it a bunch in the chats this entire week. Be very careful with a couple of things. One, be very careful with getting into too many options contracts right now that you aren't planning on essentially day trading. And even then, it can be a little bit challenging depending on how quickly VIX rises or falls. And the reason why I say that is because VIX is super elevated right now. I think we talked about this Tuesday, but if we haven't, I'm mentioning it now. And so when VIX is super elevated, volatility is one of the components that factors into the price that you're paying for options contracts. And so when volatility is elevated, so are the options contract prices. And that can be problematic if you're getting into new trades, and especially if you're playing for upside, trying to kind of catch these bounces, because you've got to be pretty methodical about that. Because what can happen is if you don't get a rapid enough recovery and the price action moving in your favor, and VIX falls faster than the price moves in your favor, which is generally not what happens. They kind of move in enough. The moves are measured enough to where obviously playing calls is very profitable, but when VIX is this elevated, it has a lot of room to fall where the market might be slower, right? We take the elevator down, stairs up kind of scenario, right? VIX can fall down like an elevator while the market is stair stepping up. But what will happen is because VIX is falling that fast, the volatility that gets factored into your options contract prices starts to eat away at that premium because VIX is falling as the market's moving up. So, I've seen a lot of folks, especially in our Discord, kind of concerned about, man, this move has been pretty good and it's going my direction, but I'm like not really getting much profit out of these options contracts. Well, it's because VIX is falling at the same time and it's deflating your premiums, right? So the other place that this becomes sort of a cautionary talking point is, if you're in contracts where you're like, oh, I'm only down a little bit, but I'm pretty far out of the money. You loaded up on a bunch of calls, for example, before some of these drops happened, and it looks like your call contracts are doing okay right now. They're not like way down. That's also because VIX is elevated. And so you're going to see you've also lost a lot of time in those contracts. So theta starts to become more of a factor. Also, how far out of the money you might be at this point becomes a factor. So even if we do get those kind of stair-step recovery moves that work out in favor of the direction of your play, your trade, it may not ultimately allow those contracts to recover, and you might see them just continue to kind of go further and further into the red. So just be careful with all that stuff. Again, everybody's got to make their own decisions and be willing to assume a certain amount of risk when they get into options trades. And obviously, I expect that if you're watching this, you know what you're doing as far as risk management goes. If you don't take some time and put some rules and strategies in place for risk management, because that's key to maintaining your account through these, kind of more challenging market scenarios. So anyway, sorry, quick soapbox moment that I thought I should mention. So let's get through the rest of these trade plans and let's work on some new ones. So we also took a look at play Dave and Buster's. I think this one was for Navy Plum, and it's ultimately kind of just consolidated. It's been in the range. It looks like it might be flirting with a breakdown this morning, but not one that really trades too well extended hours. So really one that we should probably look at more on the regular trading hours chart. But here you see, again, ultimately dealing with a lot of selling pressure. With confluence there with that weekly resistance at 33.49. Hasn't broken that yet, but hasn't broken down either. So this one, kind of keep it on watch. Hasn't really done anything that's I would say ultimately actionable as far as our trade plans go. XLV for my homie Chris. This is like his new boo, his new favorite ticker. Chris, I don't know if you're here, but if you are, say what's up. Hope you're doing well, brother. So what are we looking at here on XLV? We did this trade plan Tuesday morning. Ultimately, it broke out to the upside, gave us PT1 and then some, got right up near that. We've talked about these setups a couple of times already this morning, right? That key confluence with the key selling pressure here on the 15-minute chart for Neptune, 200 below the 333, adding pressure, even more pressure there just overhead. That's a great setup, knowing that you've got a lot of additional pressure and a resistance level there overhead. So that would kind of be your stop loss average down if you take this entry. Ultimately, that's played out to the downside. We did get a breakdown below, back test, but hitting PT1 here pre-market and bouncing with some of this good data. So again, one of those risks of trading options contracts is sometimes your targets hit while the market's doing its extended hours trading, and that can be put you in a bad spot as far as being able to actually lock profits, where you can't really do anything with an options contract during extended hours trading. So again, one of those things that you just have to be mindful of and be fanatical about, what you decide to swing and don't swing, as well as whether or not you how much time you're buying on your contracts, all that sort of stuff. Sorry, I kind of lost my train of thought there for a second. All right, Disney, this one was for unknown reviews, the earnings catalyst guru. Disney, we did this, Tuesday pre-market. I don't know why my long short, we probably pulled this over onto the recap chart, didn't we? Yeah. There we go. That looks like what I was expecting to see. So ultimately, Diz did break out with that. What they talked about raising their subscription prices or something like that. But anyway, this would have been a tough one to catch. But if you were already in here on what looks like a fairly decent confirmed break, and again, this would be a small size entry for me with those SMAs moving right overhead there, coming back, catching the bullish trend there, and then ultimately pushing up. But yeah, they got that little news or whatever that came out there Tuesday during the trading day, spiked right up to our PT2 and promptly rejected. So I'm not sure how quick that move was. I wasn't watching Disney personally, but that would have been, if you were paying attention, really awesome exit opportunity there, and really key test and rejection. Ultimately headed into their earnings report. I didn't look at their numbers overall. Yeah, I was going to say I thought they were overall pretty positive, but it sold off just, I think, again, with the headwinds of the markets at the moment. So it's consolidated a little bit here for a bit of the trading day yesterday. Ultimately, that 200 SMA caught up with it, added that selling pressure in there on Neptune with that key support resistance level there at 88.79, ultimately rejecting it down to this weekly support and trying to hold there pre-market, not really getting any love from this overall upside move that we're seeing on the markets with the decent unemployment numbers that just came out. But keep this one on watch. Could see a back test opportunity and potential rejection opportunity there at 87.07 for continuation to the downside. All right, so let's get to some new trade plans, guys. Hit me with your ticker requests. I see the folks in Discord. Don't be shy. Say hello. Give me some tickers to work on. Unknown reviews. Got ELF on the books, so let's get to it. Lumen, we can take a look at Lumen for my homie with the Goku avatar. Big Dragon Ball fan. In fact, I'm kind of casually, every once in a while, when I have time, rewatching the original OG Dragon Ball, pre-Dragon Ball Z. But yeah, grew up on Akira Toriyama stuff and was heartbroken when he passed away. Anyway, oh man, yeah, I can't wait to get my nephews into it. All right, so what are we looking at? Elf, that's right. Sorry, got distracted. All right, Elf. What is Elf? Yeah, I thought it was a cosmetics beauty. Elf Beauty. Okay. Guessing there's earnings coming up. Unknown reviews. Consistent as always. So also looks a little sketch, not real clean or clear price action during the extended hours trading session. So this is one that will focus on regular trading hours. All right, so let's take a look at this again. I've never, at least I don't recall, I've ever charted ELF before. I'm just loosely familiar with it. I've heard it discussed in passing, essentially. All right, so let's hide our indicators for a second. I need to get my support and resistance in place. That is always step one in the world of chart analysis for me. Very interesting level. It's not clean on the resistance side, but man, there's lots of really good support, good and strong, I should say, support touches off this. SPY looks ready for a rally. Let's see. It's trying. We're still right here in that, that key selling pressure is still right there. Catching that, what, 52.76 resistance pretty cleanly off that candle. But trying to back test and catch that 333 as support with a little bit of confluence right below. So we'll see. Yeah, it's looking like it wants to, but it's right there at the sort of tipping point of whether or not it's going to actually do it or not as far as give us a good run to the upside. So keep it on watch. It's right there on the cusp. All right, so let's take a look at ELF. Something sitting right in here. Kind of maybe being a little fast and loose, but I want to try to get through a few. This looks like a pretty critical resistance, obviously. Let's see what else we got. All right, looks pretty good. Anything else here on a weekly? What's up, Chris? Good morning to you, buddy. Hope you're doing well. I have a Chris. Were you here on Tuesday? Were you here for the whole live stream, or did you go back and rewatch it if you weren't here for it? Chris is in the YouTube chat for those in Discord who think I'm just talking to myself and making this up. All right, let's get over here to the daily chart. Most of it. Did you did you put hedges in place, or did you take puts when we hit our hedge range on ES? What's up, CK? You're on both sides. I like it. So we talked about this hedge range Tuesday pre-market. We said take puts, put hedges in place, do something to protect your accounts if and when ES comes up and tests this range, right? Exactly where we rejected from. So I hope you, who pay attention to these so well, followed the plan, followed the analysis on that. Just checking in with you. All right, so let's go. Ugh, this daily chart looks wild though. I like volatility. I don't like unreadable volatility. All right. Or difficult to read. It's not unreadable. I'm over exaggerating. Nice. Good stuff, brother. Yeah, we called that being a key rejection range on Tuesday. I had NVIDIA puts in place. That's one of my largest holdings. Prophylactically, you could say. And they ultimately wound up printing very nicely. That's an interesting level. I don't know if we'll really need it, but we'll keep it on watch. All right. Sorry, I need to move it along. Kind of bouncing all over the place. Apologies. Kind of a squirrely morning, I guess. All right. Looks interesting. Okay, let's get to the 4-hour chart. One of my favorite time frames. Don't feel guilty, man. You know, alerts are kind of a love-hate relationship for me, right? I see why they are helpful, especially for people just starting out. But the problem with that, this is something I've always said, is for newer traders that are trying to follow that, they don't really know why the trade went well. They don't really know why a trade didn't work, right? And, you know, when I realized that, when I started doing the daily SPY plan and people really latched onto that, I realized that was a much better way of sharing what is going on or what you should be doing with a trade. and giving people opportunities to make money without kind of, I don't know, totally doing all the work for them, I guess, for lack of a better way of saying it. And I know that, for some people, that's what they pay for. They just want alerts and that's it. But, I feel like a lot of people who strictly follow alerts and don't ever take the time to learn about the art of trading, I feel like they wind up blowing a lot of accounts before they figure out that they need to be learning this stuff and looking at charts kind of through this lens, right? You can really tell a story when you start to throw a few horizontal lines on the chart if you know how to read support and resistance, and all of a sudden it's like, oh, this shit makes sense all of a sudden, right? So it's anyway, there are also times where I'm like, it's kind of a risky setup, but I think it's going to work. And so, I try to focus on really just quality over quantity, and posting a whole bunch of stuff. I'd rather just focus on things that I'm like, man, this is a really good entry opportunity. At the very least, I think we'll be able to book some profits and move stops up, with a 90% plus confidence rate. That's kind of when I get into alerts. And then the other thing I don't love about them is sometimes I think it changes my psychology of the trade, right? I know what I'm doing and what I'm willing to risk, but then I start thinking like, man, what if somebody's in this trade with me and they're oversized and all that sort of stuff, and really, if they are, that's their problem, it's on them. But at the same time, I kind of feel like if you're following a specific alert, I'm assuming some responsibility for your success or failure in the trade, maybe more responsibility than I want. I just want to be responsible for making my own money. So anyway, I digress a little bit as I was finishing up this plan. So let's get to it. I've got an idea what I want to do here. I'm just checking a few things out. I was marking that stuff up as I was talking. Yeah, I feel pretty good about this, trying to make a move. If we can break this weekly level, 333 is right there as well. So keep that in mind. We've already talked about that once. It is right there above this entry level on the hourly chart. So just make sure that, it looks like either A, that has caught up with this level and we're breaking them both at the same time, or we're getting a confirmed break over that hourly 333 in addition to that key resistance. Something I would just keep in mind. Let's just take a look on the 15 as well. It's another good time frame to watch. Yeah, nothing really overhead there, but the hourly does have that 333 right there. So just be mindful of that. Over that, what is that? 189.21. I think we're looking for a shot at this daily level. PT1 there at 197.68. PT2. Yeah, I think we got to use this weekly at 202.43. And then over that, I think we take another shot at the next daily level there at 209.61. Stop loss average down. Might be a little tighter, or maybe I have this daily level just slight. Nah, it's not low. Probably just have a couple of levels there close to each other. We'll give it the little bit of extra room. It's not going to change things all that much as far as the risk profile goes, so we'll leave it there where I was kind of eyeballing it at I guess that's 182.52. To the downside, yeah, kind of a similar scenario to the upside. We got a weekly level that we need to break there. Already like this as the stop loss average down. First price target, daily level down here at 164.77. Second target, I think we're looking for, also I might have this weekly level a little bit low. I did draw those weekly levels kind of quick. Yeah, it probably sits a little bit more like that. If it being there, just check this again. I don't know, tough call. I'm going to go ahead and just shoot one level. I think it could get down to that weekly level, but let's shoot one level kind of conservative for PT2. Seems to be where the price can catch support a little bit before that weekly level. So look to scale out there. And then third price target to the downside, that daily level there. So this is what our trade plan looks like for ELF. Reminder, earnings. What is it, after hours today? Yeah, after hours. So be very, very, very careful swinging anything through that earnings report. Probably heard me say that 1,000 times because earnings is high risk, high reward. Okay, so expand this so it's a little bit easier to see where what price points these levels are lining up at. Let's get this into so this is our ELF trade plan, or ELF, I should say, live stream plan for homie unknown reviews. Let's go over here to the options watch list, share this with our friends in Discord. So what are we looking for here on ELF? We're looking for a break over 189.21. That should give us price targets at 197.68, 202.43, and 209.61, with a stop loss average down at 182.52. To the downside, we're looking for a break below 172.98. That should give us targets at 164.77, 155.66, and 147.35, with a stop loss average down at 178.45. Those are your ELF trade plans. Go get them. All right. Lumen for CKZ. I was going to say, I feel like I've looked at Lumen before. It's been a while. This is trading in like a split or something at some point. Or maybe I'm thinking of something else. I swear this was like, yeah. Man. Been a long time since I looked at this one, clearly. And it's not had a good run since I last looked at it either. All right, well, let's figure it out. Any drawings that are on there are pretty useless, I'd say, at this point. Remind me, what does Lumen do? It's like a tech company of some kind? Isn't it Lumen Technologies? Yeah. Investment holding company, provision of integrated communications. Sounds like a complicated way of saying they do like voice and data. They're an ISP with probably like a hosted voice solution or something like that is what it sounds like to me. They just had earnings. TradingView's data points aren't. Yeah, what was the news? That's a good point. What was the news? Let's see. There's news articles. Lumen is an AI rocket. Is it the next Supermicro? I have to do some reading up on this one. Interesting. Definitely has seen much higher price points than this in the past. But man, talk about a bargain bin buy down there at $1.72. You're up 600% in like a couple weeks probably at most. All right, let's get to it. Sorry, I digressed a little bit there. This is going to be an interesting one to chart for sure. Just based on kind of how it's moving, running right up into this very bearish SMA confluence. Yeah, I was going to say, I swear this thing used to trade much higher. Wonder what they probably just mentioned AI on that earnings call. They're like, hey, I know how to fix this stock price. Somebody say AI on this earnings call. Oh shit, he said AI. Buy it up. All right, let's take a look. Oops, that's potential weekly level that we're looking at there. color code that correctly. Wow. Well, I mean, good for them. This could be a huge comeback story for Lumen because it is. It's moving like Jim Cramer said it was a buy until recently. He probably said sell. That shot it up. Jim, if you're listening, feel free to invite me on your show. I'll show you how this works. How to find good entries. Yeah, he is something else. I mean, anybody who has an inverse ETF, that's saying something. But anyway, I digress. It's just, like I get why the weatherman's wrong a lot. I don't necessarily get how that happens and people keep their jobs. But it is what it is. All right. So, yeah, that's Jim. Trying to lasso this rocket and see if we can continue higher. The question is, where does it really open up a potential entry opportunity to where we're not chasing and we've got a good support foundation somewhere nearby to use as kind of a backstop? I think this looks like it gets going over this 853 level. I can tell that already. Let's finish getting our levels in here. I just wanted to go ahead and mark that. That's a level of interest for sure. Probably, possibly a price target. We'll see. This level sitting right there. Here. All right, I'm going to try to speed this up a little bit so we can try to do one more trade plan. Sorry. This one's just kind of all over the place, and I'm trying to be methodical with it, having just made a very large move. We don't want to get caught in FOMO. The only FOMO that you want in your life is this live stream. That looks pretty interesting, good as well. All right, so I think, yeah, this is going to be a first price target. This will also be a good one to go at with shares, in my opinion, with it, potentially making a big recovery. Second price target's there. Third target, I'd say this weekly level. Stop loss, average down. Could it be a little bit higher than this weekly? I think it is. Or I've got that weekly level a little bit low. One of the two. I think I do. I think it sits more like that. Yeah, for sure. All right. We are stop loss average down for the upside. Downside is already eyeballing this daily level. Let's see what kind of blanks we can fill in now. Definitely a large fair value gap to fill to the downside, but it's probably going to be a tight first price target off that weekly level because there is support potential there. I think we've got a decent, though, risk to reward setup off this stop loss average down. So yeah, we're gonna go. It's gonna be like a quick PT1 and then a bigger move to PT2, I think. Fair value gaps are pretty, kind of just think about them like a regular gap almost. I mean, they're, it's not. I don't think they're quite as magnetic or guaranteed to fill as a true like open gap on the chart. But we can talk about it real quick, kind of give you an idea of how I look at them. In just a sec, I want to find this third price target. Again, I wonder if I was a little bit off, a little bit too. No, there is a level there, weekly level, for sure. I think there's just another level close by down here at 242. I was hoping it would catch that wick a little cleaner. 250. Let's see if that kind of still looks good. Yeah, it looks a little off to me now. Yeah, I think it's just that wick, just a little bit of an early bounce. I think ultimately, I don't know. It's not going to make a huge difference either way. So let's go. I was kind of torn between these two price targets. Let's go with the more conservative if I'm not super confident about it. Check the hourly chart here on Neptune, see if that kind of changes my mind about anything. It does not. So yeah, like a fair value gap, Chris, I would say, like we've come up and we've built up this support right here. So you've got this one big massive candle that pushes up and then comes back and kind of builds up support right there off that 605 level. So this hourly candle right here, if you look at the hourly chart, we didn't really have any levels tested on the way up to that. We had resistance there that, of course, we expect that to act as support now that we're above it and testing higher levels of support. So if we come back down, we would expect that to act as support. But this section of this candle right here, before you get down to that next key level, and some might even say you could play it down to the bottom of that candle where it really fired off of. So between that 605 and either 507 weekly level or this 455 level, somewhere in that range would be your kind of where that fair value gap closes. We've now come back and retested existing support or existing resistance before a big parabolic move or big downside move was made that kind of has a candle with no support or resistance tests on the way up. It's just one big rapid move. No, extended hours on or off. That really, the only thing that I generally operate with it on, the only thing where I kind of turn it off or that would have me turning extended hours off is, oh gosh, what was the one that we just did? ELF, right? So here's a good example of something where I would turn extended hours off because it's going to throw things off a little bit with like all these weird, not really fully developed candles. When I see that kind of thing, I start to lean a little bit more toward just looking at the regular trading hours chart. So that's really the determining factor for me. But ultimately, especially if you're paying for the extra market data with TradingView, operate with extended hours on as often as possible because you can get those liquidity prints, especially at 8 a.m. Oh gosh, who is it? Yabba Dabba or something like that. I forget. Yabba Dabba, I think is his name. Gosh, I should know that. He's been in the group forever. Did a really interesting in fact, I think you encouraged him to do the educational post on that with those liquidity prints on TradingView if you got that extra market data. So anyway, now again with NTS, I would again generally operate with extended hours on. Maybe with some exceptions, and sometimes it's going to be ticker specific. Like you can certainly look at it and kind of gauge like, okay, I'm seeing like weird flips that don't really play out, or like not getting great rejections or bounces, and I've got these weird little dash hash mark kind of candles that are all over the place during the extended hours trading. I'd probably go regular trading hours on something like that, and then all of a sudden this looks like it makes a lot more sense. I don't have those little weird dash candles. The moving averages look like they're moving better. Price actions responding better to it. So yeah, some of it's a little bit subjective for sure. Generally speaking, again, I'm extended hours on, but there are times with certain tickers where I think, regular trading hours is the way to go. So anyway, with that, we're 15 minutes out from market open. I hope you guys learned a lot. I hope you all that were here on Tuesday, again, followed the plan, followed the analysis, took your puts in the hedge range that we talked about on Tuesday. That was a beautiful play to the downside, and those hedges worked perfectly, I think. Took us right back down to that same 4-hour demand zone. That's clearly where you want to start taking those hedges off and expect that demand to hold until things don't. So that has held. Market does look like it's trying to break out and make a next leg up here off that good economic data this morning. But as always, keep your heads on a swivel. Volatility is way up. Be careful. Don't get IV crushed on trades. With all that being said, I hope you guys had a fantastic week and finish it up strong today and tomorrow. We will be back next Tuesday morning at 8:30 a.m. for our next FOMO live stream. So with that, I want to thank you all so much for joining me this morning. I hope you'll come back. I hope you'll tell your friends. I hope you like and subscribe to the Xtrades YouTube channel. And with that, as we always say here on the FOMO live streams, plan your trades, trade your plans, go out there, have a fantastic day, secure the bag. I will see you guys soon, and in the chats, have a great day.